Welcome to this special economic analysis. Today we dive into the fascinating world of finance, exploring the challenging but intriguing economic outlook for the U.S. How has the U.S. managed to navigate the economic challenges of 2023, and what does the future hold in 2024? To answer these questions, let's begin this conversation that will shed light on the economic direction of the coming year. 2023 Economic Balance Sheet. Before we dive into the outlook for next year, let's take a look at the economic balance of 2023. It's been a year full of surprises and changes in the markets. How would you summarize U.S. economic performance during this period? 2023 has been a year of big surprises. An increase in interest rates was expected, which happened, but the unexpected was the sharp rise in the financial markets towards the end of the year. Although there were fears of a possible recession, fortunately, they did not materialize. However, there are troubling indicators, such as delinquencies in credit card and auto loans. In addition, geopolitical dynamics have significantly impacted global markets, with notable shifts in Latin America, although it is not the primary focus of U.S. investors. Inflation and outlook for 2024. Indeed, one of the hot topics this year has been inflation. How do we create a deeper view of how inflation evolved in 2023 and what is the outlook for 2024? What we witnessed in 2023 was a marked drop in inflation levels in the United States. After reaching almost 9%, we are currently at slightly above 3% inflation. It is important to note that the Federal Reserve is targeting 2% inflation, so we are still above that threshold. Rising interest rates, stable oil prices, and the economic slowdown all contributed to slowing inflation. By 2024, this downward trend is expected to continue, pointing to a close to 3%. However, much will depend on the level of economic slowdown forecast for next year. Let's shift our focus now to energy and, specifically, the crucial role of oil. There has been a lot of talk about the record increase in oil production in the U.S. How do you think this will affect the economy in 2024, especially in a global context? It is a very relevant issue. The government sold the strategic oil reserves, and in fact today we are at the lowest level of strategic oil reserves since 1983, and here the outlook for the price of oil is going to depend a lot on a few things. First, the level of world growth for 2024 and 2025. Secondly, what could happen in terms of conflict in oil-producing countries such as Russia and the Middle East, and finally, if we are going to see an economic recovery in China, a country that is a strong oil consumer. Unlike the United States, which today exports oil, China is an oil importer consumer, and the Chinese economy has been slowing down. If we see a recovery of the Chinese economy next year, this will possibly increase the demand for oil and may increase the price in general. What is expected is that we are going to see a global economy slowing down next year, but we will not enter into recession. Markets and bonds in 2024. Now, let's focus on what many investors are eager to know: expectations for financial markets and bonds in 2024. How do we see the outlook, and what are the recommendations for investment portfolios? Expectations for 2024 suggest the possibility of an interest rate cut by the Federal Reserve. The forward market indicates an expectation that rates will drop significantly, from around 5.5% to a possible 4%. This reduction, if it materializes, could have a positive impact on both fixed income and equity investments. Our current recommendation is that investors consider a balanced portfolio between equities and fixed income. This could offer positive returns, estimating a 7 to 8% return for the U.S. equity market and positive returns for fixed income as well, especially with the downward trend in rates. U.S. indebtedness. Let's now address a crucial issue that impacts both at the government and consumer level: indebtedness. Delinquency. What can we expect in terms of debts held by both the government and U.S. citizens? Yes, it is a fundamental aspect. First of all, government indebtedness is reaching remarkable figures, and it is expected to reach about $34 trillion by the end of this year. This level of indebtedness creates what we call crowding out, where the government absorbs much of the private sector's money. On the other hand, consumers have faced significant challenges this year, especially with mortgage rates rising rapidly, reaching 8% or even higher. Although we are now seeing a slight reduction in rates, delinquencies are expected to increase, especially on credit cards and auto loans, as we face an economic slowdown. In addition, we are anticipating that mortgage rates could decline, making homeownership easier for many families. However, there is still work to be done, as these rates are at relatively high levels. And so we conclude our economic analysis for 2023 and expectations for next year. I want to wish everyone a happy holiday season and a prosperous new year. May 2024 bring stability, growth, and success for all.